Welcome to Pro News Flash. The U.S. stock market is struggling to keep up. Let's dive into the latest developments. The S&P has been on a roller coaster ride. A de-escalation in the Middle East conflict lifted U.S. shares at the start of trading on Monday, but a fresh wave of selling in tech stocks saw the broad stock index close in the red. Investors are skeptical about whether hyperscalers will be able to monetize their investments, particularly given growing competition from Chinese firms and rising costs of maintaining artificial intelligence infrastructure. Investors were offloading big tech shares amid impressive IPO results for the Chinese chipmaker CXMT, and rumors that Apple is lobbying the White House to encourage the use of Asian semiconductors in its products. At the same time, news that NVIDIA was providing funding to OpenAI led to a fall in the shares of the company that had long been the market leader by market capitalization. The market was shaken by reports that chip manufacturers were giving money to their customers. As a result, Apple displaced NVIDIA from the top spot in the list of the world's largest companies, while the SOX semiconductor index continued to fall. Investors are looking not only at this index, but also at South Korea's Kospi, which is seen as an indicator of the worldwide performance of technology companies. The 36% slump from June's highs is intensifying the rotation process in the U.S. stock market. The Magnificent Seven are being sold off particularly aggressively amid fears of a repeat of the Alphabet scenario. The company's negative cash flow has overshadowed the positives, including actual and expected profits, while investors are most interested in return on investment. Despite the pullback in the S&P 500, the bulls have no intention of giving up. JP Morgan maintains that conditions are now ideal for buying. U.S. shares should benefit from lower yields, a weaker U.S. dollar, and strong corporate results. Key conditions for this strategy include de-escalation of the conflict in the Middle East and the Fed keeping the funds rate at current levels until the end of 2026. Stay tuned to Pro News for further updates on developments in the financial markets. Like, share, and subscribe.